That's right, I said it. Your payments on your home, your mortgage is about to go up, and we are going to explain why. My name is Orlando, and welcome to my channel. I want to jump straight into this, guys. This is the reason why it is so important for the information to be out there. We're gonna talk about why your mortgage payment is gonna go up, why if you decide to get into a home, you need to look at these things of what's going to increase your mortgage payment. So let's jump right into it. So we see here, Fed Chairman Powell, we should have moved earlier. What is the Fed talking about, right? Okay, just follow me on this. This is super important, guys. It says the Federal Reserve top figure said Thursday that the central bank should have acted sooner to pull back on its pandemic-era stimulus and get ahead of rising inflation. Now, just to kind of like spin on that, what he's talking about is, obviously we know our government during the pandemic printed a bunch of money, and then it caused inflation to happen. He's saying that we should have stepped in sooner to combat that. And if you've been following the news, you know the Fed has been very slow on moving on trying to control this inflation. And the main tool that they have is raising interest rates. And we know what happens when interest rates rise. You will pay more on debt. And that's going to transfer over to your mortgage, guaranteed. So that is what he's saying, and he's been slow on it. So how much are they going to raise it by? Well, it is looking like they are going to raise it by 0.25%. Now, they're going to do multiple of these raises. They're saying that on the low end, it's going to be 4. On the high end, it could be all the way up to 9. What does that mean for your mortgage rate? What does that mean for your current mortgage rate? Well, if you have a fixed rate, it does nothing. But if you're jumping into it or you have a adjustable rate, that means your mortgage rate, it will go up with every increase that the Fed does, right? So that means that you have to be ready and get ready for rate increases if you are trying to refinance, if you are buying a home, if you have a ARM or adjustable rate mortgage, which you shouldn't have done. You shouldn't have done. You should have jumped in and got those fixed mortgage rates. But let's jump right back into this. It says here, hindsight says we should have moved earlier, Powell said Thursday, adding that we're going to use our tools and we're going to get this done. When inflation began popping in early 2021, the Fed brushed off the figures. It hoped that the supply chain would alleviate and slow further price increases. Well, come on, you know, like, it's not gonna slow things down. It's not. Like, you have to increase, and they knew this, but what happened now? Now we're in this war, things are going up, gas is going up. Once again, if you've watched my last videos, we talk about how things like gas and the situation that's happened over in Russia and Ukraine, that gas production that we would get from Russia that's been, you know, that gets shot out globally, how is that going to affect products that are made for homes? All of the plastics, all of those type of things. All of that stuff is going to increase because now the supply that we have that's coming from Russia is no longer there. Now we have to pull from our own sources or from other countries. And now that supply is going to cost more because there's not a lot of the supply, right? But there's still the demand. Same thing that's happening with houses. But then you can see here, it also shows here that consumer prices rise the most in 40 years. And if you look at this graph, you can see how it goes up and down, up and down. And then when you get to 2020, it shoots up. What happened during that time that possibly could have put us in this predicament to do this, right? Obviously, it was the pandemic, and obviously it was the Fed printing money. When they printed all of that money, it flooded our system with all of this money, which then inflated everything, right? So that's beyond there. But here, let's do some numbers, guys. Because that's what this is about. Hard facts, hard numbers here. Okay, so we're going to take a look at a $300,000 medium-priced home. A medium-priced home at $300,000, and we're going to get it at that sweet mortgage at 2.8%. Now, that mortgage would be $1,233. Now let's compare that to the interest rate hike that I think it's going to get to, right? So we're gonna do that same 300,000 and we're gonna do it at a 5.5% interest rate 30 years, right? And that amount comes out to $1,703. The difference between that is $407. Now, I know what you're thinking. You're thinking like, oh, that's not that bad, Orlando. That's not that. But let's go to the next tier. The next tier would be individuals who move on the coast and are in areas that are hot. Austin, LA, Miami, New York, those areas, San Francisco, where it takes $1 million to buy a 2-bedroom home. Let's go ahead and do those same numbers with that. Okay, so a $1 million home at a 2.8% interest rate. And what does that get us? That gets us a mortgage of $4,109. Obviously, that is a 30-year. And then let's do 5.5%, and that gets you $5,678. Woo! That's a big increase, right? That's a huge, but what is the difference between both of those? Well, the difference between that is $1,569. And remember, this is a month, guys, we're talking. But here is the stickler, guys. Here's the thing that most people aren't talking about. If you own a home right now, one of the things that you have to continuously check on is home insurance. Home insurance is something that is a little sneaky, right? A little sneaky. And if you haven't been following it, and if you haven't been looking monthly at what you were getting charged a couple of years ago to what you're getting charged today, I can guarantee you, if you look at your mortgage statement now, your mind will be blown. I can tell you right now that most places, most insurance companies are now charging most people 2 times as much as they were a couple of years ago. Now, what is the cause of this? Well, the cause of this is what we're talking about today, which is inflation. Inflation, the same home that you're living in today, if it was to get destroyed, it would cost the insurance company 3 times as much to build that same home. So where are they going to get that money from? Well, they're going to get it from you. They're going to get it from the premiums that you're going to pay. So when you call them and you say, hey, why is it 2 years ago I was paying $1,000, but now I'm paying $2,700? They will tell you, well, Mr. or Mrs., XYZ, it's going to cost 2 or 3 times as much to rebuild your home because lumber's high, copper and materials are high, labor's high. Everything's high right now. So right now, it's going to cost us 2 to 3 times more to rebuild your house if it burned down, or a tornado hit it, or the roof fell in, or there was a lot of water damage or a flood. If any of those things happen, how are we going to rebuild the house at that $1,000 premium without losing money? We got to include that. They would give you the money, of course, but it doesn't make financial sense to them to continue to be an insurance company and be at a loss on every property in their mind. So if you go back and you look at your insurance, you will see that it's doubled and it's creeped up. And it will blow your mind, and you think to yourself, Orlando, well, how does that affect their mortgage? Well, most people escrow their taxes and their insurance into their mortgage, so you pay it all together at once. So you think that, yeah, it's creeping up every time I get the little escrow thing saying I gotta put X amount of dollars, and it doesn't feel like it hurts because, an extra $100 here, extra $100 there a month, it's supposed to do that. Taxes go up, right? But really, the culprit, the culprit that you gotta really follow, guys, is the insurance. The insurance is skyrocketing along with the mortgage rates that will go up when the Fed raises. So now you're getting hit double. And don't get me wrong on this, guys. Don't get me on talking about this. Taxes. Do you think taxes will stall because of a pandemic? Do you think taxes will be held back by the government because they say, you know what? We know that you just went through a tough time. We all did. Let's slow down on these tax increases. Let's not do that anymore. Matter of fact, let's just keep taxes the same for the next couple of years. No, not happening. That you will not get that breather from the state or from any government, or our government in particular, right? So you have to be weary of that. So refinances, getting into a mortgage now, make sure you look at your current insurance. See if it's doubled. See why it's doubled. See why they are charging you extra. And when you look at all of these things combined, you can see how your mortgage payment can double. It will double all together when you put all of those things that I just talked about. It will creep up on you. You need to make sure that you're doing research on your stuff, right? Why is my mortgage payment going up? Why did my taxes go up? Why is my insurance going up? Call the insurance companies, figure out a way without cutting your policy in half. What do I mean by that? Make sure that you're not saying, instead of my home being worth, if it burned down, being worth, $400,000 to rebuild, worth $200,000. You do not want to take away your coverage. You just need to understand, why is this? Shop around. Make sure that you look at other insurance companies and just don't stick with one just because, right? Make sure that there's competition for this on purpose. On purpose, guys, to get your business to other people. Do not feel like you are, stuck with one insurance company. So once again, guys, I hope you got value out of this content. I'm gonna need you to watch this next video here. It will help you get into your first rental property and learn all things financial. Also, make sure you check out in the description our membership program. I'll see you in the next one. Thanks.